Hello again, Jesse here from the Financial Toolbox. Today in beautiful Punta Cana, Dominican Republic. Today I'm going to share with you the 7 fantastic benefits of keeping your insurance inside your corporation. So I'll be speaking to all you business owners out there today. It's a beautiful day at the beach. I figured, hey, why not share a little bit of knowledge? So you should be aware that inside your corporation in Ontario, the active business income is going to be taxed at 15.5%. Personally, you're likely going to be taxed at a much higher rate than this. There's what I call a great wall of tax. As soon as money goes from where it's earned in your business to you on a personal basis, you're taxed at your highest tax bracket, which could trigger another 30-32% tax. If you could defer it further by keeping money inside the corporation, it just makes sense. So let's start with one of the benefits. The first one is by keeping your insurance in your corporation, you could have more coverage for less after-tax cost. Think of it this way. Generally, the premiums on a life insurance policy are not going to be tax deductible. So because of this, it makes it worthwhile to keep it inside the corporation. And corporations being at a much lower tax bracket, if you're at a 46.41% bracket, personally, that means you have to earn about $1,900 to pay the after-tax $1,000 cost on an insurance policy. But if you were to earn it through a corporation or pay it through a corporation, that same $1,000 cost, you only have to earn about $1,200 because you're taxed at 15.5%. So it makes your money go a lot further by keeping it inside the corporation. You're using cheaper corporate dollars. Just makes sense. That's probably one of the big reasons to keep it inside the corporation. Number 2, you get more tax deferred growth. So if you're investing inside the corporation, it allows you to invest more money with the after-tax amount than you could invest personally. This results in you dedicating more money to certain solutions like a permanent investment component. So whole life insurance policy, a permanent insurance policy, you can put more money to that solution, and because of that, you've got more tax deferred growth. The money starts working for you harder, faster, right away. Number 3, health and age issues. So this is a material difference for a lot of business owners I've seen. If you're going to pay for insurance on a personal basis between shareholders, naturally you're going to be at different ages and different health statuses. And it can be considered unfair if the younger, healthier shareholder has to pay insurance premiums for the older or more or less healthy shareholder. If you have to do it personally, it can be problematic. In this case, if you put it through the corporation pays the whole thing. It makes a lot more sense this way, and it helps alleviate this cost disparity. And you can split the premiums based on the ownership of the interests of the shareholders. I've done this for a few companies, and they love how this works out to their advantage. Number 4, a collateral loan. If the insurance policy has a cash surrender value, the policy can be assigned to a financial institution for collateral, and you can allow the corporation or a shareholder to borrow against it. So the funds can be used in a number of different ways. You could expand your business, you could buy assets, you could redeem shares of a shareholder in doing it this way. If you wanted to buy someone out, it could be a very attractive strategy. Now there's a number of risk factors in leveraging a policy this way, so it should only be done with professional advice. But still, taking a collateral loan or having the ability to do that is one of the benefits of having insurance through your corporation. Number 5, buy and sell funding. This is critical. As discussed in one of my earlier chapters, if you've got more than one owner inside the corporation, you could use the insurance paid in the company to be an ironclad way to fund your buy-sell agreement. So if there's if the relationship changes, you could have a way to make sure that that everyone gets a certain amount of money, and you could sever the relationship very cleanly. It's a beautiful way to fund the buy-sell agreements with the insurance policy inside. Number 6, use of the tax-free dividend account. This is a very important one as well. We discussed it in one of my earlier chapters, but the corporation can choose to pay proceeds to the surviving shareholders or the estate of the deceased shareholder on a tax-free basis. That's something that that without this type of policy is going to be very difficult, if not impossible, to do. Number 7, tax-deductible disability insurance. This is something that can be done if you pool more than 2 insurance policies together. You could actually have private insurance policies pooled together to be used as a tax deduction. It's quite something, but you need more than 2 people to do this, and it's an option if you've got more than 2 people in your company to have that disability insurance tax deductible. So these are the 7 reasons, 7 fantastic reasons to have insurance in your company. I hope you learned something today. There's more to that in this book. If you have any questions on the video content or any questions for me, go to my website, thefinancialtoolboxguru.com. Send me a message from there. I'm happy to help. All things business owners, it's going to be covered in here. Enjoy your day. I know we are. Have a great day.